Welcome to RFX Daily Analysis. Today the 29th of January 2025. We're going to be making analysis on a pair. And before we go into that, first off, we're going to take a recap into our previous day analysis, which was on Euro USD. So yesterday we make an analysis on Euro USD pair that we're waiting for is going to be a buy trade, and we're waiting for an entry point. So let's take a look at this. As you can see from your yesterday's analysis, Euro USD has been a downtrend for a longer period of time until 19th of 18th of January. So before it now start picking up into the upside, and of which it break a major. This is where there's a break in structure on a daily time frame. So and we're waiting for price to retrace back to this zone for it to go back head up. So let's take a look. This is our daily week. First thing we did yesterday was to identify our overall trend for that particular day, and you can see that this is a point of interest we have. Now, okay, this is our point where we're expecting the price to hit before we place an entry with a bullish indication, whether a reversal or any form of a reversal candle or pattern. So for us to place our entry, and here we have a target, and this is where we're expected to hit for us to get stop out from this particular trade. So far so good. You can see that the price has actually, though being slow, but it's actually heading towards the downside. So now all we just have to do is be patient and wait for it to play out. So now let's go into in the business of the day. Today I think let's just make analysis. Okay, let's make analysis on this particular pair here. So the USDJPY. So first thing, this my aim is to teach you how to make a very very simple analysis, keeping it very very simple and yet authentic. So now, how to make the right analysis in a very very simple way. So the first thing I normally do is to identify the overall trend for a day. You start first from the daily time frame. Daily time frame is for a long time trading, that's swing trading. However, before you go into the business of the day, you have to ensure that you know the direction of which that particular market is heading. So first thing first, we have to know the overall trend. For us to this will give us a focus on what to look out for that particular day. Is this going to be a bullish trend, or is it going to be a bearish trend? So now, looking at today's chart, we're seeing that USDJPY has been forming swing highs and swing lows in a particular circular pattern. So let's see. Let's draw our trend line here, connecting the 2 points. So this will give us a clearer view. Alright, we have our trend line here. So starting from the lowest point connecting to the upwards. So drawing this line, you see it gives us an additional clarity on the visual itself. So now we have moving up, forming lower low, another higher high. Moving upwards, forming another higher high, lower low, higher high, coming down, forming a major lower low here, and then breaking the previous high. Now the next thing we do, I like to combine it with an oscillator, which I call the RSI period 14 level 50. Now the principle behind this is that whenever the RSI is below level 50, so it's indicating bearish trend. And whenever the RSI is above level 50, it's indicating a bullish trend. So now, taking a look at, let's take, now we have our RSI to be at 43.80 value. So, and definitely this value is below level 50. So this is indicating that a bullish trend. So yeah, for our overall daily trend, we are seeing a bullish trend, and our RSI is telling us that currently the market is bearish. So you can see that these two are actually in complication, but that does not mean that okay, yeah, they are complicating each other. Daily is a longer time frame, and RSI is telling you about the current happening, the current in the map and in the what's it called, in that particular currency pair. So now, since now we have our sense of focus that okay, despite we have an overall trend of a overall bullish trend, currently for this particular day, the market is in a bearish trend. It's making a bearish trend. So now, to make our analysis further, since we have a sense of focus for the day, we move down to the 4 hours time frame, lower time frame. Yeah, lower time frame is known for swing traders and all like that. So basically, I like to make my analysis starting up from the highest time frame, which is the daily, down to the lowest time frame. Once to for me to get in this particular pattern, for me to get my focus for the day, then 4 hours to get the what's it called the to get my signals. Yeah, to look out for signals, potential to make my analysis rather. I use my 4 hours to make my analysis, and then the 1 hour to check for signal entries points. And should in case I have missed my entry point, I go further to 15 minutes to look out for retracement move to see if there's a way I can get have another entry point to take that particular trade. And if these three criteria are not met, then I will have to, instead of chasing the market, and let go and will allow the market to go its way. So because it's not advisable for you to chase the market. So now let's take a look at the 4 hour time frame, and you can see a pattern here. We drew a trend line on daily time frame, and on 4 hour time frame you can see that it's perfectly aligned. So that's one thing. Once you draw a trend line and you notice an alignment to other time frame, this gives a confidence that yeah, you did the right thing. So your trend line is perfect. So you can see that we have this trend line is a guide for us now. Now, okay, now let's look out for what 4 hours have for us. Where we have it as informing a swing high, and like that, forming high, high. And at this point, we'll notice that we have what we call a support level here. The price came and broke out from the support, and afterwards has been moving in a circular pattern, swing sideways market, consolidation market. So, and at this point, we will know that okay, we can spot something here. We can spot something here. Now, let me increase this. Okay, now we spot something here. This is a support level, right? This is a support level. So price forms a support level at this point with a breakout. And now let's look at this breakout. This is an unusual candlestick, which is telling us that this breakout is from an impassive move. Impassive move. And let's trace the source of that breakout. Where did it start off from? Okay, we can see it start off from here, this point. So here, this is an order block here. We have an order block at this point. So, and the source of that order block is from an passive move. Now, whenever you have a long unusual candlestick, you call it an impassive move. Yeah, and it's an impassive candle. And whenever you have a short candlestick formation just like this, these are corrective candlestick movements. So now this is a what's it called? This is our order block right here, and we have a breakout, a breakout from this support. I'm focusing on this support, not right currently now. This breakout from this support right now, not this. Because if you notice at this point now, we have a breakout here on this particular trend line. However, let's go back to our daily and see something. So you can see that on the daily time frame, there is no clear breakout on daily time frame. There is no clear breakout on daily time frame. So it's not advisable to just stick to that particular breakout you notice on these 4 hours. Now, there is a principle that okay, once there is a breakout, the next thing you have to for you to confirm that breakout, you have to make if it is a bearish breakout, you have to wait for it. If the next candlestick after the breakout candlestick is bearish, then that will give you a confirmation that okay, yeah, this is a good breakout. However, if the next candlestick is bearish, just like in this is bullish, just like in this case, then you know that okay, now no, there is no confirmation for this breakout. And if you are the type that trade based on breakouts, so you agree with me that from this point here now, you okay, yeah, you say, oh no, this is a trend line, I've drawn my trend line and there is a breakout at this point. So let me just enter the market at the close of the candle. Now you'll notice that once you place your what's it called entry at this point, now the reasonable exit you would like to place is just at the breakout point or just slightly 1 or 2 pips above the breakout point, inside the breakout point. So, and you see what happens. Price actually go back and you might have been kicked out of that particular trade on so and if you're the type that also okay no I like to wait after a breakout I like to wait for retracement. Now what do you notice here at the after a breakout you say, okay, let me wait for a retracement. Price is going to retrace back to the breakout point, which is at this point. Yeah. So you have your entry at this point, and your stop loss definitely should be reasonable. Stop loss should be at what's it called? The next support here. And what do you notice? Definitely, price may continue the upward movement, and you also must have been kicked out from the market at this point. So now, what is now the right thing to do? Whenever there is a breakout, you wait for confirmation. And here we don't have a confirmation, so we are not focusing on this particular angle here, trend line. So we move or we shift our focus to the support, the last support that was formed before the breakout. Now, the last support that was formed before the breakout, we can say, yeah, this is a clear breakout. However, we still don't have our confirmation here. But now we have an order block at this point, which is telling you that definitely, yeah, even though there is a breakout, there is a high tendency of market to come back to the source of this order block, to the order block to pick an entry. Now, for picking an entry, the reasonable thing to do here now, at this point, now let's delete this. So this zone here should be where this is our point of interest now, where we should have our entry point because we have a breakout from this support and we wait for and the reason and if you notice coming back down to this point, you notice that what do we have here? We have a lower low here that was formed. Yeah, we have a lower low here that was formed. So now all we have to do now is to wait for price. I didn't mean you were taking this, making this analysis earlier. You can see that price actually came back to retest this order block. And on testing it, price came back down to the downside, right? So, and here should be our reasonable entry point. So, which has already been missed. So let me just put an indicator here. This is entry. So, and the reasonable place to put our stop loss is at the next resistance point, which is here around this point. Yeah, just 1 to 2 pips above the resistance point. So this should be a reasonable place our stop loss, because anything that should make this price cross that point, we know that okay, it's aiming for this particular point here. This particular the previous high. So here should be our targets should be at the previous. Now, here should be our target. However, because this is likely to be a demand zone, so it is advisable that we don't have yours. Let's see, let's put our what's it called? Our target should be around here. So starting from this point, from the previous low to this point should be your should be the aim, the target aim for this particular trade. Let me extend this a little bit. Now we have our entry and we have our target. Target. So this is the analysis on 4 hours. After the trend, you don't just look out for breakout points. You look out for other blocks as well. Okay, if there is a breakout, it's likely that that breakout is originated from an order block. So you retrace that breakout to the source. And for me, in this case, the source of this breakout is from an order block. So, and you can see that after the breakout, the price retraced back into the order block, and you have your probably if you have your entry around that point, you have it will have activated a trade, and you should be in profit here. However, the reason why we are this there's a it's likely that this trade price might actually retrace back to this point. Now, if I'm to take my entry at this point, rather than having my target here, I will have a mini target at this point. I will have a mini target at this point at the support level, because we have a trend line. So, and there is no clear breakout here. So before I can say that, okay, yeah, it's going to hit my target here, there must be a clear breakout for me. However, if I'm having my entry at this point, now at this point should be my first target, because it's going to retest this trend line, and eventually probably it might break out or it might retrace back up. Now, in this case now, this price is likely to go back to hit this point before retracing back into the entry. There is a possibility of price retracing back here, and if there is a retracement back to the entry with any bullish or bearish indication, you place your entry, aiming for a target of this place. First target should be at the support level, and the second target should be the final 155 thereabout, 153 price level. So now this is a simple way to make your strategy, to make your analysis using the 4 hours. After getting a focus, we're looking out for a sell. So now let's move down to 1 hour and see what. Okay, perfect. Now take a look at 1 hour. Firstly, let's take a look at the trend line we draw. You can see that same thing applies. The analysis we just made indicating our what's it called entry and exit point on the 4 hour time frame also aligns with that of the 1 hour. You can see that okay, now we have what's it called, this is our previous high, which is a likely point. This is the recommended point to have our stop loss. And you can see that we have, let me just zoom this out. Yes, okay, perfect. Now you can see that this is the support level. This is a support level. This is a breakout. After the breakout, what do you have? The breakout is from an impassive move, right? It's an impassive move, and this is the source of the breakout. And now from an order block, right? Now, after the breakout, what do you notice? We have a confirmation candle to confirm this particular breakout. Now, this candle has given us a confirmation that okay, this is a clear breakout from the support level, and then afterwards we notice a corrective movement back up into the entry zone. Now, this is the entry zone. Now, what's next? Price test the entry zone and start making its movement downwards, breaking the support further. However, there is no still confirmation around this point. So it's likely there's a tendency of price retracing back into this point. However, you don't chase the market because our entry has already been missed. So that doesn't mean that okay, yeah, since I'm sure that okay, this trade is going to move, is going down, why not let me just enter the trade? No, entry point is very, very important. Entry point is very, very important. So once you miss an entry point, it is recommended that you just allow it to go. And if you are lucky and price retrace back to your entry point, you take the trade. And if not, you don't chase the market because there are thousands, millions, billions of other opportunity that will come. This trading, forex trade is just like a sky. It can never be filled. It can accommodate everybody. So because you miss a trade, your entry doesn't mean that there is no any other opportunity. All you have to do is that you look for another opportunity, and you wait patiently for it to play out. Now, this thing as what this particular analysis we make on 4 hours align with that of 1 hour. So now let's assume okay, there's one more thing. So in case I've missed my entry I make my analysis on 4 hours and I've made my entry points on 1 hour. So I look out for 15-minute time frame. See to make a one last check. Okay, is there any opportunity for me that I can use to take this trade? Is there any opportunity for me I can use maybe okay? You know this lower time frame can form swing lows and lower lows in for a downward movement. There's the likelihood of forming a lower low, shit like that. High. So you wait for it. You check out okay, there's a likelihood of having a retracement. So you wait for retracement and see a possible entry, you take it. Now in this case on 15 minutes I like to apply what I call the FVG, now value added gap. So since I already have missed my entry here, I know that the direction of this particular trade is downward, so I look out for FVG, value added point. So and the principle of value added gap for the principle behind FVG. Okay, I think I already have one here. So is that whenever there is a value at fair value gap, price has to retest that gap. High tendency of price retesting that gap before it makes it move. If it's a bullish fair gap, value gap, there's a tendency of price making a bearish move to retest that gap before going back into the bullish direction. And in this case, we have a bearish kind of fair value gap here. That's the gap between this is a three candle sequence. The gap between the closing of this and the opening of the third candle. The gap between the closing of the first candle and the opening of the fifth candle. So right now, this is a fair value gap. We identify it. We wait for price to make a move into this point. Then we have our entry. So, now it is recommended that okay, you have a stop loss just 1 or 2 pips just beyond outside the fair value gap, and this is a reasonable place to place our stop loss because I just want to risk a little amount of money so that I can place a trade here and then have my target so that I won't miss out entirely from the opportunity. But remember, we have our optimal entry around this point. So and which there is a likelihood of which there is a likelihood of price retracing into this particular point. This is what we are waiting for. But should in case it didn't happen, I just want to risk little amount and have my stop loss. And I won't want to have my stop loss at the original initial stop loss place we have, which is here, which is above the what's it called, which is around this point. You can see that the drawdown will be massive. So I don't want that. I just want to have a relative short. I just want to risk little amounts here so that I place get my entry point and I have my target at the previous at the next what's it called swing low. That's at the next higher low that was formed. So that is so you can see that's how I've looked for another this is my second entry now because I've missed the first one. This is my second entry point. So and should I get kicked out, then I'll wait for this optimal entry. So that is how you make analysis so simple and easy. So if you enjoy watching this video, this analysis, please do hit the subscribe button, and also you can also turn on the alert icon so that you don't miss out from any video or any analysis I'm making. So thank you and wish you a blue trade day. I remain RFX.